Hello traders, this is your trader's friend. Thank you for joining me today for the third video. I'm so glad you're here with me. Guys, I'd like to talk to you about trading times in the market and remind you that you can't be in the market all day unless you're going to scalp. This is the Euro USD on the 5-minute time frame, and this is this morning at 9:25 market time. You see that you have a good run up here, but you don't get another really good run until 18:15. That's about 9 hours in between. And between that, you get these fairly good swing trades, but they don't come but about every 2 hours as well. This one's at 11:20, 13:15, and 15:05. So it takes a while before you get even decent swings in the market. And before we got this good trade this morning, we did not have a good run up before yesterday at 16:55. That's about 15 hours, and look at what happens in the meantime. You just find that you are chopped. Let me show you something even on the 1-minute time frame. I'm going to show you the difference. Let's take a look at this kind of choppy price action, and let's take a look at this on the 1-minute time frame, because it's going to better illustrate the point that I'm making about the market. You can see that the price action is all junky and choppy, and it really doesn't have any direction, and you really find that you're not getting a real advantage in this market. Now let's go ahead, and you can see you get some good little run-ups sometimes on this. But looking at this, let's go and look at a good trade setup even on the 1-minute time frame, so you can understand the difference between what a good run in the market looks like. I'm gonna have to make that thing stable, and what your choppy runs are gonna look like. This is the choppy price action. So I want to remind you that if you get into what looks like a good trade setup and the previous candle is engulfed, go ahead and get out of that trade if you're trading the 1-minute time frame. To the people who are trading bigger time frames, not applicable to you. But I do want to say this: in any time frame you get in, if you get into what looks like a good trade setup and the next candle engulfs your price action, go ahead and get out. You do not have the advantage that you thought you did. Let's go ahead and take a look at a good bullish run on the 1-minute time frame. And I've blown this price action up. You can see that you can move your stop loss on the big pink candles and you're not stopped out. Look at how beautifully that price action is flowing, and you continue to move it up. I'm just going to speed up a little bit here until eventually you're stopped out. And then after that, you get a pretty decent dip before you get into this kind of choppy range bound. Now the problem with the choppy range bound is traders who get into this develop more of a POW shell shock mentality. They get into this situation and they're stopped out, and they keep getting stopped out, and they keep getting stopped out. And the market will do that to you. But what happens is it creates a level of fear in your mind that keeps you from getting in on the really good trade. So traders who get into that kind of fear, what happens is they are less likely to enter a good trade. But if they do, they will not ride the good trade out for fear of getting tricked and wanting to go ahead and secure that profit. I will tell you that I have been in 24 trades and scalps today. I know that sounds sad, but it's true. And this is the thing, guys, this choppy, range bound is to prevent you from getting in on the sweeter trades. And I can't say that that's what that's designed to do, but traders who end up in this, they typically don't enter in on good trade setups. So this is the thing. If you see the market has made a really good run up, 60 pips, 80 pips, 120 pips, chances are the market's going to rest. There are times when you get good trades back to back, but that's more rare. If the market is resting, let the market rest until you see that you have a very clear advantage. Now, you've seen videos that I made in on the 50, out on the 50 perhaps. But if you enter in on what looks like a really strong run up and pretty soon thereafter you get a close back below that 50 SMA, you do not have the advantage that you thought you did, because once you do have the advantage, you can see how price continues to flow in your favor until it does not. Let's take a look at that price action. A good run on a bearish setup. Now this is just that fairly good trade setup, but you can see once you get the advantage, your stop loss starts out here, and I can blow that up for you a little bit. But once you get that advantage, I've kind of lost my place. Okay, there we are. See, can I blow that up just a little bit more? Okay. Once you get that advantage, your stop loss is going to go here. This is going to be your entry candle. You're going to continue to follow that price action down. Now, you see how beautifully that, now this gets close, but you can see how beautifully that price action flows. This gets fairly close, but you're not stopped out. Even on the 1 minute time frame, your price action is going to flow for you fairly well if you find yourself in a good trade. We can go back to the 5 minute time frame and see how price flows there. Make that a little, okay. Now you can see you have the same situation in the 5 minute time frame. If price is flowing for you, then you don't engulf the previous price, the previous candle. If you do engulf the previous candle, whatever time frame you're trading, you want to go ahead and get out of that market. Now, if you're like me and you're looking at the 5 minute and the 1 minute simultaneously, if you choose to ride out a trade on the 1 minute time frame where price is engulfing, that's perfectly fine. But if you're on the 5 minute time frame and you get a price engulf as well, go ahead and get out and protect your capital. Guys, I just want to remind you that you can absolutely do this. You can be successful at Forex. Oh, also want to remind you that once you get 2 good trades or a good trade or so in a particular market, all you're going to get after that is just choppy. Here we are in the market currently. Once we got that last good short in the New York session, I knew it was over and I was out of that market, because you can see that all you got was choppy. So this is the difference between a good flowing market. You don't have price coming back to engulf the previous candle, and a choppy market. All you get is engulfing up and down and up and down. Guys, just want to remind you that you can absolutely do this. You can be successful at Forex. Have a terrific pip-filled trading week.